Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick, and today the markets saw some news hit the marketplace. And what do I mean by that? The private jobs came in at 32,000 jobs cut this last month, where we were anticipating a 10 to 40,000 job creation. A big miss there, although it's not the sign of a recession. But what this has done has now put the Fed in a solid position to cut rates next week. The CME Fed Watch tool is now at 89%. It's popped up since this report hit, as it was previously in the mid 70s. But it's important to note, too, this was the first decline since March of 2023 for the private sector's job, the largest of which declined in over 2 years. All right, so let's get into the market, see what happened today on the market summary board. We see here the Dow Jones did rejoice. All of these folks, they're jumping back into the markets, all with light volume, but they're doing so because they're anticipating the Fed's cutting rates next week. Dow Jones, as I said, up 1.06%. Nasdaq up 0.17%. S&P 500 up 0.31%. U.S. oil up 0.85%. Really just chopping it around amongst previous days' price action. Gold basically flat on the day, up 0.06%. Bitcoin continues marching up on the chart. Really interesting stuff there for Bitcoin. Next up, the S&P 500 heat map, and you can see here it is somewhat of a mixed board. The other day we had a lot of tech that was in the green. Tech somewhat took a little bit of the day off. Nvidia down 1%, Apple down 0.71%, Microsoft down 2.5%, Meta down 1.16%. and Netflix down 4.93%. But you see here in finance, turned out pretty nice with anticipating rate cuts. Tesla up 4%. Nice pop on Tesla, as well as Palantir up 3.16%. All right, so next up, we've got the S&P 500. You notice here all these candles down at the bottom of the screen. Want to highlight this light volume, folks. Notice how we had a major spike in volume here on November 20th, as well as a major spike in volume here on October 10th. Both coincided with these big sell candles on the charts. The biggest candles that we do see here are all sell candles. They're not green candles. That's telling us that institutions aren't heavily loading the boat on these rallies. Matter of fact, we know this was Thanksgiving holiday last week, so we do anticipate lighter volume, but this does highlight and really show you the lighter volume push that we've received, pushing the stock market right back up to the top end of this parallel channel. We did close, looks like right on it, or just actually slightly underneath it with the last 10-minute candle, pushing price right back down into that parallel channel. Now, of course, we've been tagging this basically the last 4 days, making this area weaker. Should we accelerate through this, we're going to see resistance up here at $689.70, the previous all-time highs. Next up, the Qs. Similar story here, folks. Look at that low volume. The biggest volume candles we see here are red, except for this one Friday, November 21st green candle. And you see here, price really didn't move that much. That's still where investors dumping out in the markets. But nonetheless, we still have stock price rising back up, getting ever so close to this first area of resistance at $624.97. Plus, we've got the 50% area of this tighter parallel just beyond it, right around $633, both of which will prove a test for the Qs to get through. Notice how we've really paused the last 2 trading days on moving up, considering this is all now time count situation, and we should be due for consolidation or a pullback. Next up, SMH continues marching up the charts. As I said yesterday, folks, this candle right here, pushing higher than the previous 2 days, was telling me SMH still could have some room to run. And it did so today, pushing up nicely. Next area of resistance, right near all-time highs up here at $370. Should any of this falter, this 50% area of the parallel will be support at $348.38. Into the IWM. We've called this pretty nicely, folks. You want to see bullish consolidation above this horizontal trend line, and so far that's taken place over the past 5 trading days. Nice pop up today on the IWM, gaining 1.82%. Again, guys, remember this is a lot having to do with cutting rates. A lot of these smaller cap stocks are not profitable, and they rely on borrowing money at a lower rate to stay afloat. So in this scenario, smaller cap stocks with rates likely getting cut next week started pushing up on the charts. Makes sense. Where's the next stop? Well, we can see here resistance at $250, followed by another all-time high potential up here to get back into the parallel channel right around $260 if it takes several days to do so. Next up, Bitcoin. Guys, this is really cool stuff, especially when you like technical analysis. Yesterday, we were talking about how price action went up to the 50% area, the parallel, then got rejected to close the day. We can even see this and how it interacts on the 10-minute chart, guys. All right. So yesterday, you can see here, as I said, we closed underneath the 50% area, the parallel. Once we accelerated up to the top portion of this parallel, notice how price action was looking like it was going to continue moving higher, then not so fast right at 9 o'clock, came right back down. But look where it caught support. Right here at the 50% area of the parallel. It tested it a couple times before elevating back up towards the end of the day. All in all, good day for Bitcoin. If you're a Bitcoin bull, you need to see a follow-up day tomorrow to push above today's highs. That will solidify and also create a level of support at the 50% area of the parallel that should be more solid than holding just a 10-minute candle as we displayed on the last chart. Next up, we've got gold. Gold here, you know what? A little doji candle representing a little bit of indecision on the markets. Good thing for gold, it's still hanging out here right on the 50% area of the parallel. If you're a bull on gold, you want to see the price get away from this 50% area of the parallel, start trying to test the top end of this right around $4,355. Otherwise, obviously, a decline and break of this 50% will likely pull price right back down here to the bottom of the parallel channel, right at $4,092. Guys, check out this chart on silver. Yes, we did have a green candle today, although we really just chopped sideways. But check this out, guys. When I flip it over to the monthly chart, this really illustrates what silver's done and moved straight up on the chart. Now, let's go back through history, because you've probably heard me during the show several times talking about charts like to repeat themselves. And you may say, well, what do you mean? Well, look back on this chart. And I'm going to zoom in a little bit closer so you can see. Every time silver has spiked up, and this is on the monthly time frame, so this goes all the way back here to 1979. But every time silver has spiked up, it's been met with equally hard selling pressure straight back down. You can see this has occurred several times. Here, this most recent one in 2011, pushing straight up and then selling right back off. Notice we're doing the same thing again. So is the destination going to be this inclining trend line that you see here on the chart? Could be. We've already got resistance right here at the 50% area of the parallel. Should silver continue marching up, we're going to be looking at $62.58 for the resistance. And then watch out. If you're a bull on silver, it would be smart to go ahead, take some profits while you can. This accelerated move generally leads to profit taking that can push the price right back down. I know there's a lot of other reasons people are getting into silver, but this is just what happens in the charts. All of this is human psychology, and it all repeats. You know why? Because we're still human, folks. We're still human, and humans are trading these charts. So be watchful, be mindful of what's happened in the past, because it can repeat. History doesn't necessarily repeat to a T. I like to say and think it often rhymes. So we could have something very similar occur, maybe not as steep of a decline, but we certainly are stepping up for a potential decline. Look at this RSI. This is the relative strength on the bottom of the screen. On the monthly time frame, we're pushing 85.98. Anything over 70 is considered overbought. So there's no question we're overbought near term. How far of a pullback are we going to see on silver in the near term? That's the big question. Next up, U.S. oil, and really we'll just kind of skip over this chart because nothing new has occurred ever since yesterday. Resistance up here from this red candle is going to be right around $61, and then the area to watch on the downside for a break to go lower to the next support at $54.45 will be this pivot low at $57.15. We'll touch base more on U.S. oil tomorrow. Next up, nat gas. Now, nat gas, look at this weekly time frame chart. Also notice I've now created an inclining parallel channel, further giving us insight as to where the next location is going to be, because today we kissed the high pivot from March of 2025. If you see here on the daily time frame, nice little push up right there, tagging that area and closing up here near the top of the charts. So if we go back to the weekly time frame, we can see if we continue this trajectory, The next major level of resistance is going to be up here at $5.54. Now, normally stocks nor commodities just continue up in a straight line unless we're talking about silver. We could eventually see a pullback. I wouldn't be that surprised to see one pull back all the way to the 50% area, the parallel, before continuing higher. But that's where we're at with the crossroads on nat gas. Also, look at this relative strength on the weekly time frame, 73.08, overbought near term, no doubt about it. Looking at that chart, beautiful move up on the chart there of nat gas. Next up, guys, we got to touch base on this. All right. And so you check out this chart. This is the VIX. This displays volatility for the S&P 500. Now, I bring this to your attention because, look, we're down here at 16.09, just right where we were before we had our big November sell-off, right? That basically one big day that we've been talking about with the big red candle in November. What that tells you is that there's complacency back in the market. But when there's complacency, you need to stand guard. You need to be ready because selling can reemerge at any given time. Getting down here to this level, as you see here, just right in this range, can then inspire and can end up with further selling, especially considering this complacency is occurring with lighter volume. So definitely beware, be cautious whenever the VIX is down here 16, sub $16 on the chart. That should imply we could have a sell around the corner. Doesn't mean we're going to crash, but it means that we could have some turbulence in the near future. Next up, a couple stocks doing well today. MCHP, the first two stocks we're going to go over will have some correlation. The last stock we're going to go over is actually a viewer request on Costco. So pretty neat stuff going on that chart. First up here, Microchip Technology. Huge push today, up 12.17%. Well, you may ask why? It was because they have the trifecta. They raised guidance, they have a backlog, and they're involved in AI. That trifecta is the perfect secret sauce for investors to jump on board. Even after all of these Green Day candles, MCHP continued pushing up even harder today. Notice this declining trend line on the chart. That's going to be the next major level of resistance. Tomorrow it's at $64.15. Should this momentum continue and that level get broken, we likely are tagging the $66.30 level. Be mindful, though, with this much of a move in the near term, even if we push up, there should be a lot of profit taking in this range, pulling price back down to this trend line, which then could present a buying opportunity for continued upside movement. So be watching that price action really closely over the next couple of days, depending upon if you want to get into MCHP for continued upside. But I wouldn't do it now. I'd wait for a breakout and wait for a retrace. Similar situation here on DIX, except for they're not involved with AI as much, but they did raise guidance and they're streamlining their Foot Locker acquisition by closing underperforming stores. And they've also named a new president of Foot Locker. So investors were really excited about that, think that they're getting their books in order, and a big push, 8.84% up today in the markets. Now, yes, today, right now, they're into resistance. All of this consolidation will take a lot to get through. There was investors that bought here, and after the decline, they were in pain. So they're likely going to be eager to sell in this range and take some profits, or at least get back to zero so they can move on with another trade. Nice pop here. Should price get through this area, major level of resistance coming from this declining trend line, roughly at $232.90. Push through here will then test this pivot high that occurred back in October. So be watching that area very closely to see how price breaks. If it does break, does it confirm? Then creating the trend line into support. We'll revisit that on another show. Next up, we've got ON. You can see here on semiconductors having also a very similar push as DIX, but this one up higher, up 11.01%, busting through this declining trend line. So if you're bull on, you want to see tomorrow a move higher and a close above today's candle. That will then flip this trend line into support, allowing the opportunity to buy this level for continued upside. But beware, again, RSI on the daily, near term overbought. What's likely to happen is some sort of price cooling off in this range and maybe even creating a bull flag before going up higher. And you may say, Drew, where is this going to go if this does break out? Watch this, guys. All the way up here to $94.80. Now, I won't go there in a straight line. Watch this stuff. This stuff is amazing, guys. I love technical analysis. Watch how illuminating price action can be if you simply draw the correct trend lines. Now, what I'm doing is going back here to the October of 2022 lows, all right? Getting a trend line, and I'm drawing this trend line right through here, the pivot from the April 2024 lows. Watch what happens when I do that. And I connect it all the way over to current price. Not only does it connect this pivot as we tried to do, it actually designated the pivot high here in July of 2025. Notice how this also separates price from the top half and the bottom half. And what have we said when price breaks trend lines? Well, it likes to go back and test the trend line. That's exactly what it did. Look at all of these great technical analysis pieces that we go over here in this show, and it's simply illuminated by one trend line, guys. This one trend line also is going to be the next major level of resistance should price continue moving higher on. Like I said, we could have a targeted move all the way up here to $94.20. It's not going to go there in a straight line. It's going to go there, hit resistance, pull back, have profit takers, meander, then go up to the next resistance and so forth until eventually potentially hitting up there. We'll have to see how price action treats on in the future. But man, really interesting chart here. How much info you get to on one trend line. Really cool stuff, guys. Lastly, we got Costco. As I said, this is a member or a viewer request. Really cool chart that's developed here on Costco. A lot of this price action, though, coming back testing the 50% area of this parallel is a little bit concerning, because if you notice, there's been some really big red candles and really hard sell pressures all through here. Now, yes, we have now caught support. Price has gotten back into the top 50% of this parallel, which is a very nice move. But if you notice, guys, I'm going to do this again. One trend line. Let's illuminate where the next resistance is going to be. Right here, guys, right where we're at. So you can see why price has had a hard time getting back above in Costco, how this declining trend. So if you're a bull on Costco, first things first, good news, we're back in the top 50% of the parallel. Somewhat not bad news, but just other news, we're right into resistance. Good news of that resistance, we've tagged it now 4 times. So that does weaken it, allowing opportunities for price to break out. So again, with the previous charts, we want to see a breakout, a move higher, and then a retrace down to the trend line, potentially even this 50% area of the parallel for a buying opportunity to send the stock up to the resistance at $970.53. If all of this fails, if this trend line holds price down, you're going to be looking at minor support down here at 853.88, followed by the next major level of support down here at 787. And notice too, guys, this is just too fun. Notice this pivot high strung right over. Notice how I get that price. When price breaks it, comes up, comes back and retest it, kisses it right here. So that tells me this level is something to pay attention to if you're going to be monitoring Costco, and if you're a bull or wanting to get an opportunity if price flushes, that could be a great potential first entry point for you. All right, guys, that wraps up Trading the Close for today. Tomorrow, we will have some more information for you regarding the upcoming reports, because Friday, we do have a PCE month-over-month report that should also solidify what the Fed's going to do next week regarding cutting rates. All right, guys, don't forget to like and subscribe to the video. Send it out to your friends and family so they too can also learn technical analysis and make some money right here in the comfort of their own home. All right, guys, take care. I'll see you tomorrow on the charts. Until then, have a fantastic day.